Hey guys, Vulcan Trader here. This is going to be my video on how to play Bitcoin or the cryptocurrency boom that's going to continue to ensue. Or, I mean, it's already started a long time ago. Too bad we didn't get it earlier, right? But I'm just showing, if you haven't watched my other video showing why I think there's still tons of upside left to go, and it's probably going to be the currency of the future or one of the, major currencies of the future. And I'll link to it in the show notes, my previous video, or I'll try and put it on the video here in the link. I haven't done that yet. I was trying to learn it and figure it out, but it'll be one of the two places. So, yeah, and if that video doesn't convince you, then there's no hope for you, and you'll probably just be poor in the future. Not just kidding. But, okay, so let's get started here. So now that we know that it's a good investment, probably the best investment you can make currently from an undervalued standpoint, how do we play it? And so with a currency like we were talking about before, it only has value if people believe it has value. And so the more people that are willing to accept a currency as payment, the more value that currency has. And so this is called the network effect, or Metcalfe's law was just the original name for the network effect, and then they change it to the network effect when you kind of apply it to economics. But basically just says that the additional users that you add to a system, the exponentially more valuable it gets. Just kind of like if you had two people that can talk to each other on a telephone, or if you could call 5 people, or if you could call 20 people, or 300 million or a billion people, the entire world, each amount of extra people you add, the more valuable the network becomes. And so the same thing with any currency. And so that's how we're going to value it. And so we're going to base our bets or our investing based on which one is the largest currently, which would be Bitcoin. And then down the line, because it could switch over, maybe another one takes Bitcoin's place. Most likely Bitcoin will win because it's got first mover advantage. It's already the largest, but maybe something happens and it switches, some other one takes its place. So how you do that is you so say you're going to invest $1,000. We want to bet the largest amount on the top one, and the second largest amount on the second one, and the third one, the fourth one, the fifth one, on down the line in proportion to their current market cap or their current size, which kind of roughly tells us how many people are using it or own it currently, and gives us its value or potential value in the future, because it's going to continue to grow. Because most people believe Bitcoin has value, and then the second largest amount of people believe Ethereum has value, and so forth. Okay, and but yeah, you could have that type of thing where you got Facebook and MySpace. MySpace was the first mover, but then Facebook gave better value overall, and so Facebook ended up taking MySpace's place. So we want, any one of these down here could be the next Facebook, and Bitcoin could be MySpace, or maybe it won't. Maybe Bitcoin will just keep its spot. We really don't know. Okay, and then and the Lindy effect. The Lindy effect just says that the future life expectancy of some non-perishable things like technology or an idea is proportional to their current age. So it just means that, okay, Bitcoin's been around since like 2008, so it's roughly 11 years old. It's likely to be around for another 11 years. And then Ethereum, I don't know, it's probably 5 to 7 years old. And so you just double whatever its current age is, and that's how long it's likely to continue. It's like Coca-Cola. It's been around for 100 and something years, so you double its lifespan, and then it's likely to be around that much longer. Something that hasn't been around as long is not likely to be around longer. Okay, so that all being said, we got to essentially create our own index fund is what we have to do, because there's not any index funds out there for cryptocurrency currently. Okay, so first you got to figure out how much do you want to invest. 1 to 5% of your net worth maybe is a good small amount, or some amount you're completely okay with losing just because it's volatile, and you won't be able to hold on to the long term if you don't put in an amount that you're willing to lose. You need to be okay with drawdowns, because Bitcoin could go down to 3,000, 2,000, 1,000. I think that it will go to maybe 100,000 in the next 2 years and 1 million in 10 years. But, we could have some drawdowns if, say, there's a recession in the short term, and over the next couple of years, it will go down with everything else as liquidity dries up, and then it'll boom even more in the future once central banks print money again after the recession, let's say. Okay, so you just got to be willing to hold on, dollar cost average in, however you want to do it. So to create our own index fund, if you don't know what an index fund is, all it is just you take all the assets that you want to invest in, you take their current market cap, and then you weight them according to the market cap compared to the total, and then you put that much amount of money into them. Okay, and so with this right here, I just did a spreadsheet. I'll put this in the show notes. So we got Bitcoin, Ethereum, XRP, Bitcoin Cash, and Litecoin, which are the top 5 cryptos. So these are the 5 that are most likely to be the winners in the future. So we want to say, so here's the price of Bitcoin, here's our supply of Bitcoin, and then the price times the supply of coins gives us our market cap, which is the total value of all of them combined. And then the percent of total market cap is just, I did a total of the market cap of all of them. And then I did the market cap of that coin divided by the total, and that gives us a percentage of the pie. And then if you highlight all these, that's 100%. And then we put next to this our total amount we want to invest, which is $1,000 in this case. You multiply it by 81, and that gives you, this is rounded in there's rounded out to decimal, that's why it's slightly higher actually over here, but you're just not seeing the decimals. So that gives us $813, and you just do that on down the line for however many you want to do. I would recommend actually doing 10 or even more if you could, because you see you only have $21 here, because that small bet, for example. So why we're doing it this way is no matter which one wins, let's say Litecoin took over Bitcoin's position as the largest cryptocurrency. So we put $21 in Litecoin, and see its market cap is 5 billion currently, and then Bitcoin's is 200 billion. So we do 200 divided, well, we'll do the actual amount. It's 203 billion. So 203 divided by, it's like 5.3 equals 38.3. Okay, so 38.3 times 21.39. So that small amount would equal $819. So that little bitty amount, if it ever takes over that spot, then you still, no matter which coin wins, you get the same dollar amount gain. And so this is the most surefire way to play this, so that the only way you can lose is if the entire cryptocurrency space goes to zero and crashes and burns, which I think that's a near impossibility. It's probable, but very hardly. So the more that you can index or put into your index, then the better you are. If you could do the top 100, but that would be a ton of work to do this for all top 100. But if you get the time and you want to do it, I think it would be a smart idea to do. It's just extra work. It's not really going to cost you that much more money, because the majority, 90% of your money is just going to be in the top couple ones here, and you're just throwing dollars down in the bottom ones. So that's why you do it that way, is that way you get the same dollar amount gain no matter what happens. You can't lose. You don't have to know about, I could tell you all the differences between the different technologies, between Bitcoin Cash, Ethereum, XRP, and I personally think Bitcoin Cash is the best out of these, and there's reasons why, but it'd take a bit to explain it, but it doesn't matter. Bitcoin is the largest right now, so most people own it, so according to the network effect, is the most valuable and most likely to be the most valuable, so I'm going to keep that one and not trying to guess which one is going to be the winner from a technology perspective, or which one most people will buy in the future, is a loser's game. So by owning, the more you own, weighted by market cap, is surefire guaranteed way to win unless the whole space goes to crap. Okay. So, that being said, so you have to create your own index fund, essentially, is what you're doing, and there's not really any index funds to invest in the U.S. or anything. There's one in the Swiss stock exchange. We'll get to that in a bit. But that's actually a good thing. So at some point in the future, that will happen, and your financial advisors and Fidelity and Vanguard and all these places, Fidelity's already working on it and probably happen this year, and they will allow people to buy on their brokerage, and they'll eventually there will be different companies that'll make index funds for these, and when that happens, a ton of money is going to flow into them. And if you do this ahead of time on your own, do the hard work of creating your own index, then once the true indexes come in and everyone else who's lazy comes in, you'll get all their money flowing in, and you beat them to the punch. And so that's why it's important to right now do it before that's available, actually. And then, so the exchanges you can buy in the U.S., Coinbase Pro is the best, I think. You want to keep your fees low. So Coinbase, the app, they charge you like 3% fee. So if you use Coinbase Pro, or it's pro.coinbase.com, I'll put that in the notes too. If you use it, they only charge you like 0.25%, which is about the lowest you can get as far as fees wise. And that Gemini does too, but you have to sign up for their, it's like active trader one. If you use Gemini active trader on the web, so either of these, you do it on the web, go to pro.coinbase.com or Gemini and their active trader. It'll show you the fees when you're going to buy it. So just make sure the fees are low. It's under 1% or 0.25%. And so that's the best way to do it, but that's also more work, and so we'll get to some a little bit lazier ways. And so CoinMarketCap is where it shows the exchange. Sorry, I forgot to tell you where I got this information. So this information, I'm going to go to is CoinMarketCap.com, and this is a website that keeps you up to date on all the cryptocurrencies, their prices across all the exchanges, because there's many exchanges you can buy them on, and it gives kind of an average price across the exchanges. And let's see. And say some of these, like once you get these ones right here, you can buy on Coinbase, and Gemini has all of them except for XRP. But like, so you get down to lower ones. Coinbase has EOS, but say Bitcoin, Satoshi's Vision, you wanted to buy some of that because you're going to index even more. So you click on it, and if you want to find a place to buy it, then you click on it, and then you go to this Markets tab, and this will show you all the exchanges that it's possible to buy. So you just sign up on one of these that is available to buy in your country or your currency, and some of them don't allow you to buy in fiat directly. That's why, like Coinbase, Gemini, you can buy in actual fiat, whereas some of these you can only buy in USDT, which is Tether. So basically you have to transfer some of their crypto to it in order to buy it. But anyway, you can Google all this other stuff. I'm trying to give you the information that I don't think is out there on the best way to invest in it that most other people don't talk about. And let's see, Gemini, so say you're lazy and you don't want to calculate this, make your own index, and you don't mind paying a little bit more fees. Probably the next best bet would be Gemini you can do it on their app or on their website. They have a cryptoverse, and it basically will do this for you, except you won't get XRP. So you basically get, well, it has Zcash. So you would get Bitcoin, Ethereum, Bitcoin Cash, Litecoin, and Zcash, all weighted by market cap, and it automatically will index them for you. And you can set up a monthly recurring buy, which is actually a good thing to do. You could just dollar cost average, maybe $100, $300 a month, something like that, whatever you can afford, and you just set it, forget it, and till 5-10 years in the future, you turn it off whenever everyone owns some, and then you sell it. But and so it'll automatically buy it for you and index it automatically, but then they charge you like a 2-3% fee or something. If you want to have some Bitcoin in your IRA, your 401k, your health savings account even, GBTC is an ETF that you can buy in the US, but it's Bitcoin only. I'll show you that one. So if we go to trading view here, GBTC, Grayscale Bitcoin Trust, and so it's just an ETF that tracks the price of Bitcoin, basically. It's in a different amount, but the same percentage-wise moves roughly. It should go. And then you got another one which is on the Swiss stock exchange, which is hodl.usd, and it actually does the top 5 cryptos weighted by market cap, and they actually keep all of them in cold storage and wallets. If you know what that is, you can Google it, look it up. But that one's one if your brokerage account or your IRA, 401k, if they allow you to buy, you can do GBTC or HODL if they allow you to do that in there. It's which one is it? It's this one right here, HODL.USD Immune Crypto Basket Index ETP. And so it'd probably be some fees if you're not in Switzerland to buy on this exchange, but I'd say it's worth it if you got at least a decent amount of money that you want to put in and you can't get it out of your retirement account, let's say. And there's just a lot of gaps just because of it's only open when the exchange is open, but cryptocurrency trades all the time. And then we get so after you bought all your stuff on the exchanges, or you're buying it every month, and oh yeah, say you have a amount you want to invest, so you invest the total, and then you can always just do the same thing every month or every year. Whenever you have some more money you want to invest, then you just do the same thing, and I just invest it whatever the current market cap is, or you can try and figure out how to rebalance it, but either way is fine. You're just ballparking it here, and anything like that is going to be good enough as long as you get roughly the market cap in your portfolio. And so once you buy it on the exchanges, you don't want to keep it on the exchanges, and the reason is the government in theory could all of a sudden shut down the exchanges and make laws against them and take away your money, because you are not, the exchange holds your private keys. You have to Google all this, understand crypto better from a technical standpoint. I'm not going to cover all that, but essentially they hold the keys to your wallet and you don't hold them whenever it's on an exchange. So you need to get it off the exchange in order to have complete control of it, to where you are your own private bank that no one else can control but you. And so you want to put it onto your own wallet, and then make sure you keep your private key in 2 different secure physical or digital locations, maybe somewhere, maybe one at your house somewhere, and somewhere at someone else you trust, or you could put it on your computer in a password protected file, or on the cloud in a password protected file, something like that, just where you got 2 different locations, and in case one fails or you lose it or whatever, so you have your private key that keeps you, so that you don't lose your coins once you deposit in them. And then you want a good wallet, and this is all me from a redundancy standpoint. My system engineer mind is you want many backup systems to protect you from points of failure. So that's the same thing with the private key. You want multiple spots where you store your private key in different physical locations. Same thing with the wallets. You want multiple brands of good wallets, not just one wallet, because if one wallet, say, that wallet gets hacked or something, there's something wrong with its code, then you would lose all your money. So the more wallets you could split it up into, better. If you just split it up into 3 wallets, then if one of them gets hacked, you only lose 33% of your money. If you divide it up into 10 wallets, and you only lose 10% of your money if one of those gets hacked. So multiple different brands of wallets, and I'll show you a couple here if you just wanted to pick 3 good ones. Atomic Wallet is a good free one. You can put about any cryptocurrency on here, just down on your computer, your phone. That's a free one. One that's even more secure is the hardware wallets, which 2 good ones are the Ledger and the Trezor. And make sure you buy them from make sure you download the Atomic Wallet from this particular Atomic Wallet website, and the Ledger that you buy it from, brand new from their website. Don't buy it on eBay or Amazon or anything. Same thing with the Trezor. And I think that's it. That's it. So that's a complete guide to the best way to invest in cryptocurrency, keep from losing your money, because this is just still a brand new space, and all the technology is still being developed for it. So that's why you got to just be careful how you do it, and how to play it right and make the most out of it. And wish you all the best of luck investing. Like, subscribe, hit the bell, share with your friends, and we'll keep more good stuff coming to you.